I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, colleague, and friend, Senor Nicolas Hodge, who's also an investor and the publisher of Daily Profit Cycle, amongst other very interesting adjectives the man wears. This is the 300th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in. We're going to talk about the Trump era, the era of Trump 2.0. We'll get into all of it. Mr. Hodge, first and foremost, as always, how are you, sir? 300th episode. I'm glad we had that beer once upon a time.
Listen, I want to thank everybody for subscribing to our OnlyFans channel here. I was going to start by doing a little striptease of this match strap I've been having to wear for this tennis elbow I got. That's all the rage these days. We got to monetize, Gerardo. No, but seriously, the response was not overwhelming, but I think above what we thought it was going to be for the many dozens of you that have subscribed and have continued to subscribe even today. So we appreciate that. We appreciate your patience as we work out any kinks with this new sort of format. I hope it's streaming live right now. I'm not checking in on it, but I assume my phone would be blowing up and my Slack messages as well if it wasn't live. I'm doing well. We're both gearing up to head to Vancouver this weekend for the Vancouver Resource Investment Conference. I'm sure we'll talk about it. And I can't believe it's been 5 years. I'm glad you suggested we do a podcast because I don't know if I would have thought about it. I can't believe all that's transpired in those 4 years. We're back to another Trump term. We've had a different president, and that was certainly before I had a gray streak in the corner of my head here. So goes time, Gerardo. What do you want to talk about?
No, look, OnlyFans and kinks. I think that's a great place to start. Let's talk about the overall markets. My monthly or quarterly finger on the pulse when I want to check in on the real economy, of course, is always go to dinner with the wife, go to a restaurant, and every now and then we'll end up at a strip club, right? And for the first time, I've been saying that lap dances have, despite inflation running rampant, eggs being a crazy amount, you can feel the inflation. We feel it in the healthcare premiums for the employees that we have. We see it at the supermarket. You see it all over the place. We know inflation is continuing to ramp up. And I got my final confirmation the other day, Nick. I have to tell you, I asked what the lap dances go for, and they now are going for $30 in some cases. So $20 doesn't get you what $20 used to get you, folks. And that is a trend that we are seeing in the overall indices. I want to start by talking about the real interesting markets that we've seen over the past several weeks, but especially this last week, felt a little wonky and almost directionless. If I'm describing it, you are more the market savant amongst the two of us because I watch it as it relates to the resource sector and obviously keep track of things there. But you're more nuanced with it. You check the volatility index a lot more often than I do. I keep my eye on the Treasury because the blowouts, the black swan events always tend to come from the bond market. But what's your feeling? What's your take on the overall indices thus far?
I think directionlessness is a great word. I've been saying we needed closure with this election and the incoming Trump administration for a while. We'll get that on Monday. It just feels like there's a bit of a vacuum that needed to be filled. Volatility sort of spiked up. So, what happened is, what the market wants, Gerard, or the market wants their cowbell or their rate cuts or their punch to be spiked. And, a couple of weeks ago, the market was pricing in more rate cuts than it was pricing in last week. We said that inflation was going back up. I've been saying inflation was going to go back up. We've been talking about it. Egg prices, we mentioned a bunch on this podcast. I see in the mainstream media now, chocolate, cocoa, coffee being mentioned a lot. We said it wasn't the bird flu, right? And so inflation is coming home to roost. And sort of that's what we saw. The thing is that the market and lots of investors allow themselves to get whipsawed because the headlines were that, inflation was softer while it went up month over month from November to December. So I'm not how it was softer. You really got to get into that, the gym and do the mental calisthenics to see how, core CPI was softer, et cetera, et cetera. Like you said, all you got to do is go to the strip club or all you got to do is go to the barber where a haircut's now $35, $40. All you got to do is try to buy a dozen eggs for $8, right? And you know that the inflation is there. So, because it came out quote unquote softer in the headlines, the market started going back up after the number came out, right after the S&P was sort of in not crash mode, but certainly in correction mode and filled a gap over the past week to the downside. I can talk more about in a second. So the market got giddy again, said, oh, shoot, the headline says inflation's going back down. We're going to get more rate cuts in 2025 here. And then, the S&P index started going back up. In my Hodge family office issue last week, I put a chart of the S&P, in fact. Let me see how crazy I want to get on this first episode. Can I share my screen here?
I love it. I love it. Let's get to it. Let's see if it works, folks. We're learning
I
as we
think it
walk.
is.
Look at that.
So
Oh my
look,
God.
I had
You
this
guys are
chart.
in for a treat if I can share screens now, folks.
Oh, it's crazy. So, today's January 16th. You take 7 days off. I would have been writing the last HFO issue on January 9th, back in here. And I was saying that, I put these two red lines and I said that you could get a flash right down to, I said 57.73. It went to 57.83. So I said 57.83. It went to 57.73 right here. Excuse me. And I was saying it's going to catch itself right there for lots of reasons. The economy's still growing. The VIX was still relatively subdued. And back to what you said about the directionlessness of the market, I knew that a Trump administration was going to be coming in here in the next couple of weeks, and he's going to start doing the things that, that we've been talking about since early November, the deregulation, all that sort of stuff. So just a chest pound there, calling out the exact level to where it came down and bounced from. And then if you want to check in on the VIX, because why not? Well, I have the thing shared there. The VIX came right back down right here in the
Sure.
past week. Like it spiked here to 22, which is choppy territory, and now it's telling you, look, everything is all good. We're back down to 16. So that's broad markets right there. That's how I see it. Looking a little bit forward, I think I see inflation continuing coming to home to roost. I was telling you recently, all those things I mentioned were soft, right? Eggs and cocoa, et cetera. Corn's been going up, but it hadn't spilled over into things like copper and oil. And I was saying I think it's going to. Maybe we talk about copper a little bit later, but it's spiked up out of its wedge, also, which I had a chart of last week above 430. It can get comfortable there, then you're going to see this inflation spill over, and it is spilling over, and so you'll see that inflation number continue to go up into the new year. So we'll have to see what that means for rate cuts going forward, but certainly there's ways to profit from it. By owning those things that are inflating. I'm thinking back to 2020 and 2021 now when this first kicked off. You can own that copper and gold, which is spiking back up above 2,700 in your account. So that's probably a pretty good overview. What else?
Look, I always say that I try to look at investing and allocating my capital, and the people around me's capital, uh, with a global view on things, right? And you can't ignore China if you dabble in the resource sector. The fact that China is basically crashing in bond market terms, and copper's at a 430 handle on the futures. Um, can you imagine where copper is headed with the deficits that are looming and China, which look, folks, anybody that thinks China is just going to roll over and continue to capitulate is mistaken and in for a rude awakening. There's going to be massive additional stimulus. We've seen a lot already in the last 6 months. There will absolutely be more here in 2025. I think trade wars are going to continue to escalate, but I want to bring it back to copper, and I think that's a great indicator of where inflation is headed, even if you don't believe that we have a strong economy here or in China. And I think, to gold's credit, gold has held up absolutely beautifully despite a dollar that looked like it wanted to breach the 110 level. It touched it, it kissed it, it pecked it on the cheek a couple of times, and then it pulled right back. It's right at the 108.5 level right now. And despite that, gold at 27.15, silver dropped below the $30 level, turned it right back around, picked it right back up. You mentioned cocoa, you mentioned oil, you mentioned copper. You can look around. Inflation is going to be a dominant theme for 2025, and so is volatility, folks. I really want to stress how volatile I think 2025 is going to be. We touched on it. We touched on it a couple of weeks ago, and I mentioned to you that for the first time in a very long time, I might have, it won't be a large cash position, but a larger cash position than I traditionally have, for the simple fact that if, we do get a flash crash or something along those lines, I want to be able to have enough capital to where I can buy that crash and make it count, because we'll come out of it. It's just the way that the system is set up, right? The bankers on Wall Street, and the powers that be aren't going to allow for a crash on a sustained basis. It will require something catastrophic that, knock on wood, hopefully we don't see to pass. But I look at headlines. So I think about the economy and I think about China and I think about the stimulus that's coming and where copper is. And I look at the earnings, talking about the overall indices, and the headline reads Wall Street banks had a great quarter and the boom times are just starting. We're at near all time highs. Gold's at 2,700, silver's over 30, copper's at 430. Uranium, which we're going to talk about in a minute, is at the 75 level. That's primed and ready to take off again, folks. And I think it's going to have one of the best years in the commodity space. But so I look at the banking stocks. I'm like, well, fuck, rates, mortgage rates are like 7.5%. Mortgage applications are down, to multi-decade lows. How are banks having such a great quarter? And why are the boom times just starting? So the very next headline says Morgan Stanley tops estimates on strong equities and fixed income trading revenue. And if you are someone of solid, decent means, right? But counting on a fixed income and don't have a different revenue stream because of age, because of upbringing, because of opportunity, because there's just no time in this busy world, whatever that is, you have to be very cautious because I don't think that fixed income revenue is going to be the most stable type of income that we get in 2025. I think there's a lot of volatility to be had there, and it'll be curious to see how the markets react to Mr. Trump's policies and his presidency. I mentioned it's Trump 2.0. There's already some backpedaling going on with Elon saying, well, I know we campaigned on Doge and we were going to find 2 trillion in spending and we're going to get rid of that. I'm having a little trouble coming up with the 2 trillion, folks, right? And we talked a couple of weeks ago, Mr. Trump, he campaigned and he said, "Man, I would fix this war in a week and I would, get the prices of everything down." And we heard a couple of weeks ago where he's admitted like, "Look, once prices go higher, it's kind of hard to bring them back down." So we're already getting some of the backpedaling that happens with all politicians. This isn't a partisan podcast, right? You see it from the left, you see it from the right. I mean, heck, we just had Joe Biden pardoning guys that had child pornography on their computers and all sorts of craziness, which heck of a way to go, Joe. I mean, fuck, you don't do anything for a while. And then that's just like goodbye to the country. It's a heck of a way to stain a legacy, right? Whatever there was of it. But back to the markets, I see a lot of volatility. I want to touch on uranium here in a bit. But any more thoughts on the overall indices and where this revenue is coming from and why these banks are having such great quarters?
Well, you mentioned yields, and they sort of been all over the place, but talking about volatility, right? You have rates in the U.S., spiking higher while they're doing the opposite or the converse in China, which you mentioned. With the banks specifically, two things. One is private credit, which I've been reading a lot more about. These banks are getting in sort of the private lending, private credit game, and that's where a significant amount of flows are going, right? Big capital that's managed by these banks that used to be on the private equity side. The banks are now getting into this in a real way and allocating some of their customers' capital to it. The other thing is the deregulation that I mentioned. One of the new recommendations I put out in the January issue of Foundational Profits was specifically related to the capital markets. There's a capital markets related ETF, and my reasoning behind that was, if Trump is truly going to cut red tape in the financial markets, then I think some of these companies are in for a decent run, even though,
Sure.
I don't know if the fun is just beginning, but I think the fun is at least going to continue. And I'm talking about, not banks, not Goldman Sachs, but I'm talking about exchanges, right? The CBOE, the CME,
Yep.
S&P Global, NASDAQ Incorporated. I want to own those type of companies because if there's going to be more business activity, if there's going to be more IPOs, if there's going to be more of anything, those are sort of the ultimate entities that benefit from it, right? Through fees, additional listings, et cetera, et cetera. They're also the entities who get the most protection because they're the largest. If there were to be some sort of black swan or, some sort of bailout that emerges. Not that I see that on the horizon, but I feel like there's some sort of safety in those big financial companies. And so
Sure.
for the first time in a long time, I waded back into there, trying not to overthink things. And sure enough, they got sold down in this past week of volatility and the S&P filling that gap that we just went over. But they came out of it really strong, right? We bought that dip and now they're up 3, 4, 5% in a week in the portfolio, right? So just another call out there of what we're writing about in the other issues, trying to use this Bizarro World to tie it all together.
Well, listen, somebody that was influential and very helpful to us early in our career, Mr. James Dines, right? The legendary James Dines. What was his famous saying, right? Don't think, do.
Look.
Look, act. And I'm telling you, folks, that is going to apply in a very pronounced way to the uranium sector this year. I just had the really, really good off the record conversation with somebody in the uranium space that's as tied in as anyone there. Keeps his finger on the pulse. Really, really articulate and intelligent person that I count on for his macro uranium takes. He's at conferences around the world. He's behind the scenes with a lot of the firms that are lobbying for different things. And off the record, he wouldn't. He's a CEO and a chairman of companies. His professional opinion has to be objective and not speculative, right? Mine doesn't have to be, so I can have off the record conversations. And I asked him, I said, "Well, what are you seeing out there in the uranium space?" And he said the utilities are finally being vocal about getting off the sidelines. So for those of you in the uranium space that aren't aware, we talk about data centers and AI and how that's going to affect demand, future demand, right? These data centers and these applications need tremendous amounts of clean energy and absolutely tremendous demand will come for those applications. However, the biggest customer single by far it's the utilities, right? The utilities are the biggest consumer of uranium. We've gone through a contracting cycle where the utilities have had the luxury of just staying on the sidelines and waiting for those contracts to start to roll over, and they have the benefit of having uranium be a small input. And what I mean by that, folks, is when they come up with their budgets for their utility company, whether they pay $60 for a uranium pound or $150 for a uranium pound, it doesn't move the needle as far as their overall cost. So they don't have the same urgency that someone else might have when it's looking to secure long-term supply. So what this gentleman told me is that the utilities are now getting really aggressive behind the scenes, starting to come off, and that they don't care whether they pay 100 or 120 bucks. They're now starting to scramble for supply, long-term scalable supply. What does that mean for us? Well, look, the last time that we had the utilities come out, we got a bull market for the ages. I've gone on the record saying that I think uranium overshoots to the 200 level before settling back, somewhere around the 125 level on a more sustained basis. We're sitting there at 75 bucks and we're coming off a 10-month consolidation. You folks out there have a phenomenal opportunity if you don't have any uranium exposure to add to your uranium exposure on the back of a 10-month consolidation with the equities trading at a deep discount to the last time that we were at the $70 or $80 level. I would encourage that you get that done because his price prediction kind of shocked me. It was more in line with mine. He thinks we see 150 this year in 2025. There's only 12 months in 2025. He thinks the market's going to start moving. It's going to move quickly. It's going to be aggressive. And if that's the case, these equities that have consolidated the last 10 months are in for 5, 10, 15-fold runs. And some of the names that I keep preaching about here, which I'll save until the end, those companies are going to have 50-fold and 100-fold gains like we saw at the beginning stages of the lithium bull market. We now are having a consolidation. Lithium looks like it's bottoming as well, and we'll have a good 2025. But uranium looks really, really, really good to me. Thoughts there, Mr. Hodge?
You can handle this, Gerardo.
Hey.
I got it. This chart I came up with it last week, and I'm trying to get my mileage out of it because I think it's a good one. So I put it on the tweeter, and I wrote a Resource Doc Digest article about it for today. So, you say I'm a chartist. I'm really a neophyte when it comes to that sort of stuff, but I dabble, and that to me looks like a classic cup and handle chart. So it cupped out. You can see there all the way back to 2010 from 73. Dipped all the way down. We lived through all that paying $20 uranium. I'm sure you remember that. And then the cycle started right a couple of years ago, and it ran to over 100, and now it's done its little correction there, right here. So you got this full cup. You got a perfect handle that comes right down to the line here. And what typically happens after this handle completes its formation is it goes like this, right? And so
Yep.
that gentleman you were talking to, likely Mr. Trimble, he's not wrong, right? Because see where this red line was over here, where we were back in the day, the 2007 run. I mean, history may not repeat, but it definitely rhymes. And things that rhyme with 130 and 140 are 120 and 150. So, pick your number there where this thing is going to go. But I definitely think he's correct. And I'll keep going on a couple of other things. First, you mentioned the utilities. I'm going to leave this up for a second. The utilities are fundamentally getting back into the game. They don't just have to supply the reactors that they've had operating in the United States, but now we're extending the life of them, which we saw last year in California and other places. And they're turning on ones that used to be off, as we also saw recently with Constellation and Microsoft and 3 Mile Island. The other thing that happened recently is Constellation, that utility I just mentioned. They went out and bought a related utility called Calpine for, I just wrote it down so I wouldn't forget, $16.4 billion, which also has nuclear assets. So you're getting this sort of M&A and deal flow occurring in the nuclear space as well. And then you obviously have the added demand side thing of any SMRs that get built and approved, and I continue to see news on that. And then two more points you can see here if you want to read, or I'll just to say them out loud for you audibly is, last year, not 2024, 2023, at the COP climate meeting, you had some 20 companies agree to what it says there, triple their nuclear capacity by 2050. Well, they just had the meeting a couple of months ago for 2024, and now we're up to 31 countries saying that they're going to triple their nuclear capacity by 2050. That's a 50% increase in the number of countries that say they're going to triple their nuclear capacity. And then the last thing there is, Russia is still a thing, right? And the
Mm.
U.S. was gearing up to ban the imports of the enriched Russian uranium last year, and Putin went ahead and said, you know what, don't even bother. I'm just going to not send you any anyway. So
Yeah.
you've got that whole thing in the background, which has really created other companies in the fold, right? It's not just utilities and uranium companies anymore, but now you've got like Centrus that has done well, ticker LEU, and NewScale and Oklo and all these other companies that you can look at. And um, again, it just turns out to be a real thing, and that we were right at $20 uranium all those years ago, that you don't want to buy it now. Well, you're going to have to buy it when it's whatever, $75 a pound, $100 a pound, and that's where we're getting into now. So, what else? I mean, people think I know something about uranium. I'll be on the uranium panel at this VRIC here this coming weekend with Mr. Roll, and maybe Mr. Tremble or Amir. But I see things going on in the background as well. Like, I read all the press releases as they come into my inbox. And one I saw the other day was ISO Energy cancels deal with Anfield Energy, right? And then I think a day later, the headline
Oh,
comes across,
Amir.
UEC expands relationship with Anfield Energy, right? So you caught that too. I mean, yeah, this
Fuck
guy's
yeah, I
back.
caught that. I was laughing
This,
my ass on. Holy, well played, sir.
yeah, this guy's back there hustling. And then, I continue just to say, freebies again. That's sort of mid tier, because there's not really major uranium producers outside of Cameco and Kazatomprom, but that's sort of mid tier. UEC, Energy Fuels, Encore Energy. Um, do I want to keep going? Denison. I mean, those stocks are the liquid ones that are going to rip. And I agree with you. We just had a year of consolidation. And I just laid out sort of the fundamental thesis for you. You get Sprott out there saying that, and UXC, which really has all the data.
Yeah.
This shortfall, this supply demand imbalance is going to extend to 2040, right? So we're in a
Think
bull
about
market.
that. Think
Yeah,
about that.
we're
We say it casually, right? Flippantly almost. It's going to extend to 2040. Folks, that's 15 years that we have to make a bag of money, or
yeah.
many, many bags of money. And this is just in the uranium space, right? I didn't mean to interrupt. I wanted to, put some emphasis on that point. That's a long ass bull market. It's a lot of profit opportunities.
Yeah, no, that's it. And so we just had a year of consolidation. I just showed you the cup and handle chart. All the things are lining up. And so I'm excited about uranium as well. And we've got new deals coming. We have a new deal that we've talked about on this podcast that we've already financed. And I've been working on another one that's not even raised their sort of first round of funding yet, that I'm excited about as well. So, yeah, I think uranium is what's the headline on my article there? It's going to have definitely a better 2025 than a 2024. Yeah.
Yeah, no, I think it's all systems go on copper, on oil, on gold. I got to get your take on oil here in a second. Silver, uranium, lithium. It's going to be a heck of a 2025. with some volatility attached to that. Oil, that's the one commodity that I personally just stay away from. Every time I try to do something in that space, it's a dry hole, and the story ends real quick. So I don't dabble. I watch it just for the price action because there's a lot of geopolitical considerations that come with controlling the price of oil and where that price is. But thoughts there because oil has even caught a bid here recently.
I've been telling you it was getting bullish. I think last week I told you it'd be going up 6 weeks in a row. We've been in the oil and driller related SPDR ETFs and in foundational profits, albeit I'm a little bit early, which is otherwise known as wrong. But here we are. It's coming. I didn't look at the price today, but it's probably been going up for 8 weeks in a row. I was writing in foundational profits that if this inflation number is going to keep going up, it's going to be driven by the oil price, which is one of the main inputs to CPI and most people's inflation related models. Natural gas is also interesting to talk about. I mean, the East Coast was freezing their ass off for the first time in 8 years. Natural gas doubled from 2 to 4 an MCF at the Henry Hub, and that's 100% increase if you're doing math alongside me, which also contributes to the inflation. And so I have to mention Russia again. With things going on with shadow fleets, and I think there's going to be some crackdown on that. I was reading this week that OPEC hadn't quite met their production targets, which means there's a reduced supply out of OPEC. And, Iran is in the Strait of Hormuz is still really a thing as well. We were talking months ago that could get cut off. They're talking about a ceasefire now, which I'm not sure how much there is left to fire on. And that's sort of a bad joke. But, I don't think Iran's done. And I think that, if you go back to 9/11 and Rumsfeld's list of companies or countries we were going to knock off, we just did Syria, and who's left? I mean, I don't think we're done in the Middle East. So that's a catalyst for oil, including inflation and geopolitics. And oh, by the way, if we're not going to get a recession and the economy is going to grow, you need that stuff as well.
Yeah, couldn't agree more. It was interesting to see some of the comments from Mr. Trump's Treasury Secretary pick, Mr. Besant, who says that he is definitely pro-nuclear and nuclear expansion, domestic nuclear expansion, and North American nuclear expansion will definitely be a focus of the administration. So connect
Love
all the
to see it.
dots. Yeah, I love to see that. If you connect the dots, folks, we're
And
setting up
just
for a pretty good run. Yeah, go ahead.
just one point on that, because this actually, I saw this from Amir. While they're doing the confirmations, right, this week. And so they're asking all the tough questions in their suits and they're pointing the fingers. And I hate politicians anyway. The question was, there's a clean energy race going on. That's how the question was framed.
Yep.
And his answer was, nah, there's
Well,
an
there's not.
energy
There's an
race.
energy race. That's right.
Yeah, China's going to build 100 coal plants this year, he was saying. And that's the point I wanted to make, because I continue to see this stuff about how about the LA fires really is the lens through which I've been seeing it. But look, these LA fires are a result of climate change. We got to stop flying. We got to do this and that. And now, there's so much data out there that we can just look at it. And some of the
Yeah.
smartest takes I've seen are about China, right? Because China's emissions are going like this. And you guys know that we share the atmosphere, right? So whether you stop farting or stop flying or whatever it is you do, it's not going to make a fucking difference because the emissions that are coming out of China. And so you can't handcuff yourself, your economy, your citizens, and certainly the third world's not going to let you handcuff their growth. There's a billion people still burning shit for fucking energy, Gerardo, and wood. So, you got to let those countries develop. And that's the way to frame it. Like, that was a very smart answer. It's not a clean energy race. It's an energy race. And then he went on to say why he was bullish on nuclear. And again, it is what it always was. Like, you need the nuclear to have your clean baseload power if that is what it is that you're after. So I thought that was a very smart comment by the incoming Treasury Secretary there.
Yeah, I mean, what's going to happen next? Are governments going to lock up their citizens for not having solar panels at home and make them stay home for 2 years, or arrest them or fire them from their jobs if they don't register as a solar clean energy? I mean,
I mean,
that'd be
citizens are
crazy. That'd be crazy, right? If something like that happened, where like you were forced to not work and to stay home and to not go out if you didn't take the pill.
I see what you did there. I mean, yeah, even with the natural gas, not just in California, but here in Washington, like people aren't standing for it. That was on the ballot here, the natural gas in Washington, because they try to crack down on it, and people are like, "Nah, we're gonna burn natural gas, man." Like
Yeah,
it makes all
and
the
again,
sense.
let me be clear. Like, there's a smarter way to consume energy, no doubt about it. Just like there's a smarter way to own weapons, right? I'm a big Second Amendment guy. But we have to be honest as a country. Like, there's a smarter way to own weapons than the way we do it here in the U.S., right? There's also a smarter way to produce energy, and there's a smarter way to use energy. But to get on a high horse and um, get judgy and hypocritical about, how we do it and when we do it is a little meh to me, right? In the words of Dave Chappelle, is like, quit punching down on us, man. It's like, let's be smarter, but it's not one or the other. It's just an energy race, and let's do it as efficiently as we possibly can.
Well, let me tie some things together, and I don't know where we're at in the little sheet we made, but and try to push this conversation forward. So, um, I think it was my wife that was asking the other day. I saw a headline. It was about China limiting the export of aluminum, and I was like, "Well, there's another one. Like another one bites the dust, right?" And she was saying, um, "Why does China have all the metals?" And so she got my answer in the kitchen. By the way, she can't believe that people are paying to hear me talk. You can't believe it. It's wild to her. So anyway, I do appreciate you. So I gave her my,
Most men's wife would pay us to shut the fuck up, and here you guys are paying to hear us talk. It's a beautiful world out there. Thank you, folks. We appreciate every single one of you, by the way.
so I told her, we exported everything to China, like not in terms of goods, but in terms of we exported our manufacturing processes, we exported our, in some cases, mining, but certainly the production, and as a result, we exported our emissions, right? So yeah, we can feel good that U.S. has lowered our emissions, but they're refining all the shit that goes into your fucking phones anyway. And so anyway, I gave her, she was like, why is that? And I said, well, America stopped producing metals, for various reasons, but basically NIMBY-ism, they stopped approving them. They knew that we could get, at least then, the supply elsewhere, and with no foresight into like geopolitical futures or things like that. And now, I'm repeating things that lots of folks know, especially this audience, but now they can turn the dial and say, no, you're not getting antimony. No, you're not getting gallium. No, you're not getting germanium. No, you're not getting aluminum, and maybe even copper. And so I started talking about that because I had Greenland on the list because, that's the reason. Like the U.S. hasn't invested in its future in terms of resources and processing and things like that. And what do I want to say? We need to get back to that is one thing, and I see us starting to in some respects, but there's also still no easy answers. Like I've seen way too much about Greenland over the past 2 weeks, and I appreciate the idea. I think the Louisiana Purchase was great. I think the U.S. getting Alaska was great. There's no reason that Greenland can't be a part of the U.S. I'm not opposed to it, but what I am opposed to is saying that it's a panacea or that it's going to present some near-term solutions. And there's been some great, writing and tweets about this and the types of, mineral deposits that Greenland has, because this is nothing new, right? Like I've been, Gerardo, next week will be 18 years I've been at the desk. I saw a calendar alert next week, and I was like, holy shit. Anyway, I remember promos about rare earths in Greenland from over a decade ago, and
Sure.
I still don't believe they're producing any rare
No.
earths out of Greenland. They're very, and I'm not an expert. You probably know much more about rare earths than I do, but it comes down to mineralogy and how these deposits are hosted, and
Mhm.
metallurgy, right? Can you get them
Yes.
out? And
Yep.
some of these deposits in Greenland, did I memorize it? Are in eudialyte, which is very dirty to process,
Mhm.
turns into a gum, it increases your emissions because it takes so much to treat it, etc. And then I didn't realize this, but a company that we're and you are aware of, used to be Leading Edge. Is it still called Leading Edge? We
It
tried
is.
Tasman even before that with the Norris
Sure.
Shard deposit.
Sure.
It is in a similar type thing. I didn't realize that it was also a tough mineralogy deposit, and so I've known about that stock or deposit for over a decade as well. And so all that to say, what we already know, like, these deposits, they take a while to come online. Even if the metal's in the ground, you might not be able to get it out. And so it's fun and it's clickbaity to say, oh, we can get Greenland and we're going to get these minerals and stuff. But it's sort of like Doge, right? Like the theory is great, but the
Sure.
practice is something real different, man.
Absolutely. Extraction, that's the fatal flaw for most of these deposits. It's complicated, and then there's a reason that, China's running the board on that, and taking everyone's technology along with it. If everyone else could have figured it out already, they would have figured it out already, right? It's not as simple as just wanting to do a thing. So I am encouraged, and the one thing, I always give Mr. Biden credit for, was the hilarious Leading Inflation Reduction Act, which had a lot of very good critical metals legislation in there that I anticipate Mr. Trump will rename and own, because he's a master brander, and make his, but will continue because it actually is good policy to establish domestic sources, technologically and on the critical metals side for the future. Right? You had a good joke. I see the smile there, Nick. What was the thought?
I was going to say, you could have his own OnlyFans so people would pay to watch him master bread.
They're selling bulletproof shot glasses. Have you seen that?
No.
Why the fuck do you need a bulletproof shot glass? But fucking people will buy anything, man. Anyhow, a great segue. We're talking about critical metals, antimony, gold. Once upon a time, you and I went to the Snibnite project. It was then owned by a company.
1 second. I think we're
Yeah.
going to talk about premium portfolio picks. So I should just interject for 1 second. This is the part of the podcast that's going to get cut out going forward, that people aren't going to get for free. So, and we're going to talk about just various stocks that we're invested in and are in our letters and other letters that we publish, and maybe some crypto as well. So I defer to you, Gerardo, to wrap it up. Oh, rest in peace, Mr. Bob Euchler and then David Lynch, I would say. I had
Oof,
a
what a
moment
day.
today because, oh man, Bob Euchler, I know it's like wild, man, like just a bit outside. If you guys are fans
Classic.
of Major League or
One of the
baseball,
best movies
anything
ever,
like
man.
that, I mean, good Lord.
Yeah, one of the best movies ever. And on the other side, Mulholland Drive and Twin Peaks. And then, yeah, definitely two legends, on the best, that way. I am Gerardo Del Real, along with my partner, Mr. Nick Hodge. This was the 300th episode and first live episode of our weekly therapy session we call Investing in Bizarro World. I hope everyone has a great, great week. I hope to bump into some of you at the Vancouver Resource Investment Conference. We'll see you next week, folks.
Adios.